Good Thursday morning, Market Chameleons, and all those joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Parkamonic. How you doing, Dave?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
All right.
And I'm going to share my screen. And while I'm doing that, a quick note to anyone joining us for the first time. Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on a show and ask your question live, we provide a link to Zoom on the live chat on YouTube. So click on that. Once you get over to Zoom, click on raise your hand. We'll let you in. You could ask your question live. If you prefer to type your question in, you could type it in on that live chat on YouTube. Will's watching it. He'll read it back to me. While we're waiting for more people to join us and questions to come in, we'll start out taking a look at the pre-market report. These are stocks trading in the pre-market hours, see if we could get some insights. And then we'll take any questions that come in. If we don't get any questions, I'll just continue on talking about conversations that we've started already in the past, or some common questions I get in emails.
All right, okay.
Perfect. So pre-market report, these are stocks trading in pre-market hours. I'm going to first scroll down here to these three boxes here, and you can see we have a list of our most active stocks in the pre-market, biggest percentage gainers, biggest percentage decliners. Here I see 47 stocks made our percentage gainers list, 179 on the decliners. So from this perspective, we're looking like we're setting up for a bearish bias at the open. Let's also scroll up. Up here, we get this calendar view by day. So this one, July 6th, that's today. We're get a view from a high level of what's going on in the pre-market hours of stocks that are up versus down versus previous day's close. So here we have 244 stocks that are trading higher, 584 stocks trading lower. As far as shares of volume, 334 million shares trading higher versus 70 million lower. Okay, so that one looks a little bit, favorable towards the upside. But if we then convert that volume into dollar numbers, right? Because you could have 1 million shares that traded for a penny and 1 million shares of a stock that's $100. That's a big difference, right? In the dollar volumes. So dollar volume notional, we have $1 billion worth of stock trading higher, $3.5 billion lower. So that also shows a bearish bias at the open. All right. I'm going to come back down to this list. And in this list, we do see that there are small cap stocks in there. We have ETFs, leverage products, and so forth. So we want to take this list and narrow down to a smaller group. To do that, let's use the filters above. And in this example, I'm going to use this one, an ETF. I'll click on that, and we get a list of ETFs to choose from. Let's take SPY, this first ETF, that's S&P 500 ETF. We'll click on that. And, let me refresh my screen because I had it up for a while. Okay, there we go. Let me do that over. So in ETF, let's click on SPY. Hold on. Let's click on SPY. And I don't know why my computer's slow. All right. We got 3 stocks that made our percentage gainers list, 40 on the decliners. And so these are stocks that are holdings in SPY, right, which are the S&P 500 constituents. And here we do show a bearish bias at the open, 3 versus 4. I mean, 3 versus 40, right? 40 on the decliners list. And these are stocks that had to meet certain thresholds to make our list. So we do have volume, stock price, thresholds that it has to meet to make this list. So from this perspective, you could see, again, looking like we're setting up for bearish bias at the open. I think one that stands out right here, Meta up today, 0.6%. And they did launch a new app that
direct competitor to Twitter.
So I haven't seen the I think it just launched.
I set up the official Market Chameleon.
Oh, app, really? Okay.
I grabbed it.
So I don't
know if we're gonna do anything with it, but it's we have it.
Okay. And is it similar to what did you
it looks very similar. I haven't played around with it other than I wanted to go on and get our, we have a set, we set up an Instagram years ago.
Right.
For Market Chameleon. So you go through your Instagram and basically connect.
Right. Okay.
So
right.
I just
the Instagram's more like what images and photos.
Yeah, and friends sharing. Well, I mean, there are a lot of influencer on it, but this is supposed to, I think, be more information, news.
Right, like text driven and so forth.
Text driven,
yes.
Correct.
Yeah. So it'll be interesting to see, how they start competing. And I think once Elon took over Twitter, he did start making lots of changes there too. He's trying to get it to profitability. So let's take if there are any questions, well, I'll take them now.
Yeah, nothing's popped up other than Rob asks, do we think there's really going to be a cage match between Elon Musk and Mark Zuckerberg?
That'll be an interesting pay-per-view event. I don't know. Although
my brother loved that idea.
But did I think Mark Zuckerberg actually did go and compete in like either martial arts or
I think it's jujitsu maybe he's into, but he's become a very passionate like workout martial arts participant.
Yeah, so maybe there's some, and I don't know what Elon Musk is doing, but at least maybe from his side, he might be serious. It'll say it'll be
it's
an amazing event.
I guess any publicity is good publicity.
Yeah. So
it definitely puts the fact that Zuckerberg immediately responded.
Yeah,
was great, right?
Yeah, exactly. Yeah, no,
and maybe they were foreshadowing. I mean, I had no idea this thread was going to be launched. Did you?
No, I didn't. Just maybe right up to no, I didn't even know ahead of time. I think once they launched it, that was the first I heard of it. That they're gonna, compete directly with Twitter.
Supposedly 10 million users
signed up already. Yeah. And how many users are on Twitter? A couple hundred. Is it like?
My guess would be
hundreds of millions or billions.
My guess would be hundreds of millions.
Yeah, I would think it's hundreds of millions.
But a lot of them were bot. I mean, it was whatever it was. It's a lot less today. If they got rid of the bots, they're getting rid of sites that post a lot of stuff.
Right. Let me, I'm going to bring up my note. Actually, let me bring up Notepad. I'm going to just comment on some.
I'm finding the answer: 450 million users on Twitter.
Okay, so that's still 10, that's way more than 10 million. You know,
Yeah, well, it's the
first
first
day,
day,
yeah,
right?
is good, yeah. But I think the way those social media work is it's all
Hey, we did have a question
driven.
pop up from
Okay,
Lauren.
okay.
Lauren was asking, is there a way Dimitri can look at SPY returns versus risk-free rate?
Um, let me think here.
I mean, you
The
don't have to do it. I mean, if
the
there's
so
something you want to get back.
like a returns adjusted for the risk free. I don't like a graph or something like that.
Yeah.
I think I have that. Um, I don't. Yeah, I don't think I have like a graph that would
Yeah,
do that.
I mean, Lauren's just making the point that I don't see why the S&P is up when the risk-free rate is 5%.
Yeah, it's I
Good
think
point.
being driven. Yeah, and right now I think a lot of it is driven by the enthusiasm for AI because if you guys, those of you using ChatGPT, probably are seeing the beginnings of something that could create, massive productivity in our economy, maybe similar to the internet, right? And that's kind of right now how people are viewing that potential, right? Where you have AI that could start performing tasks that right now you have, you know, college educated professional people working on, and this can automate those processes, and you can imagine or assist in those processes, and that could create huge productivity boost. And if we see that, or if then yeah, we'll see the economy grow, we'll see inflation come down, we'll see standard of living go up. So just like the internet and new basically industries that we haven't seen before, right? So I think it's not right now. I don't think the market is moving on pure fundamentals, historical fundamentals, more of a forward-looking, enthusiastic view of this potential, right? And you can see what's driving.
Yeah, because if you look at the SPY, can we look at the underlyings and see how many are up versus how many are unchanged or how many are down? I would venture to say, I don't know, 10 to 15% of the market has most of the gains in this move.
Right. You could see which ones are moving up. Microsoft, obviously, they're investing in open AI, and they're heavily recalibrating for AI. Amazon, same thing. They're going to be a big benefactor, especially you run these learning machines on AWS because they have these powerful GPU machines that require a lot of power, and Amazon could be a big benefactor of that. NVIDIA, obviously, they're the ones making the chips, and 57%. You could see just in the last 6 months, up 196%. Amazon up 56%, Microsoft 52%, Apple 53%. Tesla is up, Google 41%, Meta up 131%. So you could see a lot of these high cap stocks, right, that account for a large weighting of the market are moving on the I would say very bullish outlook on the AI technology, right? Like just NVIDIA alone, ran up. You could see almost 200%. Now they're a $1 trillion company, right? That's the only $1 trillion semiconductor company. The first semiconductor company that hit that $1 trillion. So I don't So what's happening in the interest rates and what's happening in technologies are two different things right now, and I think that it, it, it's in a situation where this is something new. We really can't price it. We can't really know for sure how this AI technology is going to, increase product by how much, what new types of apps and products can be created. It is still in a very early stages. But people are putting in large premiums, right? People are putting in large premiums based on forward expectations. I think like what Microsoft is trading at, like, some, I don't know, over 30 PE, 30 forward PE, I think. Apple, all these are in very high valuations right now. So on the flip side, yes, the Fed is working towards, slowing down the economy at we're at 5% going higher. That itself will potentially weigh down on the economy.
Yeah, I'm just looking at the list. It looks like there's 300 stocks that are up over the last 6 months, and then like 204 that are down.
Yeah, but a lot of it so far has been concentrated, right, up here. Because when we look at these returns, not only are they huge returns, but these stocks have very large weightings in the S&P 500. Let me just really quick. I have it. So here you go. The top 10 stocks in the S&P 500 account for 30.6% of the index. And if you see Google there, it has two classes of shares. So that's double counted. So you could say top 9. And this Berkshire Hathaway, a lot of it, Berkshire Hathaway, it's a holding company, owns a lot of these shares, right? But Berkshire, I think they have Apple in there. I think he owns Apple, Amazon, So a big portion of the S&P 500 is already concentrated in a small group of stocks, and all these stocks are big, have been boosted in the last 6 months.
Well, it is interesting because all the shorts who've talked about Tesla from the short side have always said, well, it's really fundamentally just a car company, right? And why is it trading at such high valuations? And the big bulls, Cathie Woods, Barron, the hedge fund or the investor in New York, they've always said it's way more than a car company, right? It's a tech company.
It's a tech.
And the tech they always talked about, they were talking about Tesla's AI before AI was a thing, right?
Right.
And that's the long-term value proposition, and the speculation is, how much technology and AI are they going to be able to bring to probably the automotive industry, the transportation industry,
right.
They're could revolutionize major chunks of this economy.
Right. Which is,
that's why they talk about a $2,000 price target on that stock.
Right.
Which seems crazy, right?
Right. And for Tesla, Tesla could be a very big boost to the overall economy as well, because if they could actually, use AI to make transportation more efficient, faster, cheaper, any of those traditionally have boosted the economy. So the transportation sector, whenever we've seen, innovation that made things cheaper, faster, more efficient to transport either goods, or people, we've seen a boost in the overall economy. So they do have a potential to make an impact, beyond their business and where we will feel it, outside of Tesla, but we'll feel it in the economy as a whole. Let me see if we don't have questions. I might just address, a couple emails.
Perfect.
So a couple, people, they ask either through emails or we had it in the show, and when they say risk management, it's regarding risk management, they associate stop loss orders. They'll say, where should I put my stop loss order? Right. I want to manage my risk. Where should I put my stop loss order? Or, what do I do? If something goes, something goes against me, how do I manage a loss? Basically, it's like, how do I manage a loss is the questions are like this. And I want to point out, risk management is different than what manage a loss. The manage a loss is not risk management. A loss is, that's it. It's a loss. Risk management is what you do prior to that. Risk management is, you want to define your risk ahead of time and take steps to avoid a loss. Okay, that's what risk management is. It's when you're doing things to try to avoid a potential loss. Okay, a potential loss. Right, that's it's not a stop loss order. Doesn't do that, because a stop loss order is saying, I lost, this is the most I could take, and I just want to get out, but the loss is incurred. Right, so what is a risk management? Right, look at in real estate, right? And this is the problem, is that people want to, they don't think about hedging, right? Because hedging, there's a cost. There's always a cost to hedging. And I think people get into this saying, well, I don't want to incur any kind of cost. Well, if you want to avoid potential risk, there's always some kind of a cost to it, right? So look at real estate, right? You buy insurance, insurance. Fire insurance, whatever insurance, liability insurance. That's because you want to avoid the financial burden of a potential loss in the future. So you're paying today, hoping that you never even have to use it. You're hoping that whatever insurance you're buying, right? Nobody buys insurance hoping that, somebody slips on their property and then gets sued. Nobody wants to, you don't want that to happen. All right. You don't want somebody to fall and injure themselves. You don't want to be in your house and have a fire in your house burning down. You're trying to buy that insurance to avoid a potential loss. But you're managing that risk ahead of time, right? You're hoping that you don't even need to use it, but you're paying for it to avoid a potential loss. What about, inspection, right? Well, you do an inspection before you buy a house, because after you buy it, right, once you buy the house, it's yours. And if there's a problem, well, now you got to fix it. You got to pay for it, right? And sometimes it could be a very costly problem, right? Like your roof, your, your electric, your walls. If you want to avoid that kind of loss, right, ahead of time, you don't want to wait and then how do I stop it, right? How do I manage the loss? There's no way that there's no risk management is not managing a loss. It's trying to avoid the burden, the financial burden of that loss ahead of time. So you got to first define what are my potential risks, where can I potentially lose, and how do I hedge them? How do I manage my portfolio that if this happens, I am protected up to a certain point, right? So when you buy a car and you buy car insurance, you're not hoping to get into an accident, right? You're not hoping that, oh, wow, you're hoping you never have to use that car insurance. You're hoping that whatever you paid for it, you lost, right? That's your hope. And that's how hedging is in the financial world. You're not trying to make money on it. You're trying to avoid a potential loss. And that's an important concept to understand, because stop loss orders, that's people who try to avoid the cost of hedging and thinking, well, I'll just wait for the loss to occur. And then I'll just take the loss. No, this is hedging ahead of time. Okay. Managing and hedging ahead of time. So I think that even the concept of risk management is very foreign to people, where you're looking at it, and not only is risk management a way to avoid loss, but you're also trading more efficient. Okay. So when you're looking at your risk, let's take a grocery store, right? And let's say you have apples, right? And oranges or whatever. Oranges, milk. Well, these also have expiration dates. They have a shelf life. And you're looking at it and you're saying, okay, I put them out there and I have oranges, but they didn't sell like I thought so, right? So, maybe, let's say the cost of these is, $1 per item. Well, you sold it and you're trying to sell it for $1.50. But it didn't work out, right? And a day goes by, 2 days go by, it has a shelf life. Well, now you have this risk of expiration that they're going to go. So this is a potential to say, I could potentially avoid the entire loss by starting to discount them, right? Maybe at that point, you're like, hey, let me try to sell it for $1. Let me try to sell it for 75 cents. So now you're selling it even here at a loss, trying to avoid the potential of going all the way down to zero. But this is how you manage, your risk. And it could be opportunities. What if you sold them for $1.50 faster than you expected, right? You thought, hey, I think I'm going to sell 10 oranges a day, and you sold 15. Well, that could give you an opportunity to start increasing your prices because the demand is much higher than you anticipated, right? And you're trying to average those out over the longer term. So when we talk about risk management, it's never as simple as put out a stop loss order or doing one thing, right? It's really, you're talking about, it's like managing an entire business enterprise. That's what you're doing, right? And there's lots of things involved there, lots of different metrics, lots of different components in there to consider. So that risk management is not a stop loss. Like, think of risk management as there are entire courses and specialists just to risk management, right? So if it was just a stop loss order, you wouldn't have that. But risk management itself is, this, you could go and get a, master's in it. and take lots of classes just on risk management alone. So keep that in mind. I guess we're right up at 9:30, Will, so I'm gonna stop right there.
Perfect. I did have a question, and it looks like I answered myself. On YouTube, someone asked, is the company events, is that a premium feature? You need to subscribe for that, you know? Down in the news, it looks like it may be. I just logged out.
I mean, yeah, I'm not sure where he's looking. I think
Well, if you go to the stock and go down to news, I think it's shows up as company events.
Yeah, so we have it in lots of different places. Certain places, you know, we do reference it, and it's not, but other places like certain reports it will be. So I'm not sure where he's actually.
That's where he was asking, right there.
Yeah.
Where you just.
Okay.
All right.
Okay. Yep.
Cool. I'll let him know. Thank you very much, my friend. Great job.
All right. Thanks everyone for joining. Stay safe out there and hope to see you guys tomorrow.
All right. Have a great day, everyone.